All right, we have arrived to Christmas Eve. And for all those that celebrate Christmas, Merry Christmas. Happy holidays to everyone. Whatever you celebrate, I hope it's great and I wish you the very best. And the Santa Claus trade has, or the Santa Claus rally has arrived. Today was a really nice up day in the stock market where we had stocks go up nicely. The Nasdaq was up 1.35 and S&P was up 1.1%. So really nice gains. And really, if you go back to the 20th, the gains have been fairly good. So the Santa Claus rally comes in once again. And what's interesting is at the end of the year, 74% of the time, you get a stock rally. And when there's an election, 83% of the time. So chances are good that we're going to keep rallying through the remainder of the year. That would be great. And I'll take it. It's been a good year. It's been a good couple of years. And for that, I am grateful. So what I thought I'd do this evening, it is Christmas Eve. And just put in any requests you have out there. Looks like Rotel and Cheese has a few threads that we can follow. The first one is luxury goods. The second one is energy. Really good topics. Let's get into them. I think I could bring more on the energy topic. It is a space that I invest in and look forward to that. But the first one, luxury brands, it'll be interesting to take a look at those. We'll look at them. I don't invest a whole lot in luxury brands, but I can read financial statements. So that's what I bring to the table there. Then we'll take a look. So let's get going. And, as people join, just put in whatever stock you want to talk about, whatever topic. Let's make this a lively session. All right. So just following the thread that Rotel and Cheese put out there, and I'll put that comment up here. You wanted to take a look at LVMH, Hermes, and then Montclair, I believe. So I thought I'd take a look at them. And these are premium brands. And these brands, when China was really doing well and there was a lot of prosperity in China, these brands were doing great. They're still, I think, doing well. I have to think. I don't own any Louis Vuitton or any of the brands we're going to talk about. I don't own them. And I don't know that my wife owns any of that stuff. But I know that there's big clientele for these types of products. This particular company, I believe they're located in France or Italy. Let's take a look at where they're located. France. So this one's a French company. And then Bernard Arnault is the CEO. He's a pretty rich dude from what I've read. So this is a really, really valuable company. They are sorry for the delay. I don't know what's going on with my browsers and internet have not been getting it done today. All right. So it's a big cap company, $327 billion. And this is measured in US dollars. Looks good. And we've got revenue of 91 billion, net income of 15 billion. PE looks reasonable at 21.89. And they pay a small dividend. Okay. So let's take a look at how they've been growing or not growing. You could see in the go-go years when the economy was really booming, they were booming. And when the Chinese economy was booming, they were booming. 2020, we had a setback because of COVID. And now they're seeing a slowdown in revenue. In Europe, they report semi-annually versus in the US, you get a quarterly report every quarter. There you have to wait 6 months. And you can see that they've hit a plateau, kind of a flat growth period in their existence. Okay. They are a big, big company. I'm curious to see what their gross profits look like. Instead of doing it in my head, I think I'm going to go down to the easy button down here, 68.5% gross margins. So these are luxury goods. This company gets to really charge a high price and keep a lot of that price in the form of gross margin. So that's pretty good. So you have flat sales, good margins. Free cash flow looks good. 12.9 billion in free cash flow. And let me double check. Is this in euro? Yeah, it's in euro. The euro and the dollar are almost 1-to-1. I think it's 104 euros to a dollar. So it's pretty close. Having said that, there's no growth in the company. And I know this is a really good brand, right? Louis Vuitton, and I think they own a couple of other brands that are just really, really held in high regard. So I know that there's a lot to like about their brands. But there's no growth. So, I mean, I would value this company, I don't know, at 200 to 250 billion dollars in market cap. I couldn't go as high as 327. And if you look at their stock over the 1 year, man, my browser is not reacting to me. So give me a second here. So if we look at the 1 year, here's the 5 year. Over the 5 year, the stock's done okay. It's 43%. I mean, that's not great. It's okay. But over the 1 year, they've sold off 19%. And the reason for it is the lack of sales. So you don't have any revenue. So what's your sense, Rotel and Cheese? I mean, do you think sales are going to go up, like revenues are going to go up? I'm trying to think of, in their space, right? We want to have a booming economy and we want to have plenty of discretionary income. What's your sense of that? Are we going to have a good market for these guys or not a good market? With Trump in office, I know the U.S., I think wealthy people are going to do well. They're going to probably pay less taxes from a percentage perspective. They're probably going to have very good years of just boom period. So that's good. On the China side, their economy is supposed to start growing quite well. So that might be good news for them. And, but I'd just be guessing. This is not my space. This isn't my strength, luxury goods. I'm just kind of going through the financials and trying to see how I would value the company. I would value this company at 2 to 250 billion. I think it's priced a little bit high. And this company here, I don't have any analysts covering it, from stock analysis perspective. So that would be just my best estimate, and then go with that. Yeah, so this one here seems a little pricey, and I'm not sure that their market's going to bounce back very quickly. I don't know that we're if anything, from public opinion standpoint, I don't think we're in a booming economy in the U.S. It seems like people are still trying to make ends meet, and they're still trying to get over higher inflation. So that's LVMH. This is a very nice company, premium brand. Looking at Hermes is a little bit smaller, but still big, 240 billion. This is in euro. These guys are on the French stock market, and they are a very high PE. Okay. And so Hermes has continued to grow. So that's good. And Hermes is not quite as big as LVMH. LVMH was very, very big, 85 billion in revenue. But Hermes is only 14. Very, very, very different. But the valuation This company is valued at 240 billion, where LVMH was like 327, but LVMH was like 4 times bigger. So that's interesting. It's all about growth. These guys are growing 11%, where LVMH is not growing. So that's the difference. This stock is showing growth and is receiving a better valuation because it's growing its top line revenue. It's keeping, the growth engine going, getting more customers, selling more products to the existing customers. So those things are working for the company. All right, so that is the company. Looking at the gross profit, 71%, that's better than LVMH. And free cash flow at 3.8 billion. So these guys are growing. That looks good. Assuming the balance sheet is good. So cash to 9.48 billion, only 2 billion of debt. So they have like 7.3 billion of cash on the balance sheet, net cash. So that looks really good. Strong balance sheet. So this company here, I mean, I'm not seeing, so 3.8 billion. So these guys are worth 80 to 120 billion. I'm not seeing great growth, and the margins are good. Maybe 120 to 150 billion in market cap value, but I can't get to 240. That's really, really high. And the PE is 54. That's really high PE. This one here seems like it's priced quite high. For the past year, it's up 18%. For the last 5 years, it's up 239%. So this one's really done well for 5 years. It's just been growing a lot better than LVMH. So this stock's really, really worked. I just think it's really priced high. And, it's got good margins at 70%. But it is slowing down. It's not that big. It's 14.2 billion euro. And it's beginning to slow down because the compares keep getting harder and harder. As it gets bigger, it's harder to grow by the same percentage. So this one, both are a pass for me. This one looks better than LVMH. I would say that, but it's not like a very obvious discounted stock. It's actually the opposite, which is it seems like Hermes is being sold at a premium as well as LVMH. Montclair, these guys also distribute high-end apparel and related accessories for men and women and children. Market cap of 14 billion, $3.3 billion of revenue. This is based on US dollars. PE is much lower. They've been growing, and looks like their growth is not quite as good as Hermes, but better than LVMH. The growth looks okay. These guys are more profitable than the other two. So Montclair has better gross profit margins than Hermes and LVMH. And their free cash flow is good, $922 million. Let me take a quick peek at their balance sheet, see if their balance sheet's good. So they have about the same amount of cash as they do debt, so they can pay off debt immediately. Good balance sheet. These guys are worth, 10 to 20 billion. I'd have to really get into them. And they'd be worth 20 billion if you felt like they were going to continue to grow at 10, 20%. And they'd be worth 10 billion if you thought they were going to have slow growth, like 2 to 4%. So they're priced, I think, fairly. And at 14 billion, if you saw the stock come down over time, maybe it would present a good opportunity. But over the last 5 years, this stock has not been able to get a really long-term rally going. I think the one that accomplished that was Hermes. It had a nice chart of the stock price going up over time. This one hasn't. This one's just been going up and down, these long-term effects. Now, what I would say is this has had a propensity of, going down, then going back up. So it might be a good swing trade stock where you buy it at a low price, hang on to it for about 6 months, and if it rises, then sell. But you got to know that that's your plan going in. If you stay too long, you're probably going to give up your gains at some point. Not the right stock for me, but that's what I'm seeing. That's how you can play this stock if you were interested in investing in it. So, okay, so we just covered luxury products, Montclair, Hermes, LVMH. And I know I live in Southern California, and South Coast Plaza is a really nice mall here in Costa Mesa. And a lot of these stores are there. And I like walking through the mall with my wife, but we don't go into their stores. It's like the stuff's like super expensive. And, I'm good. I don't need to buy expensive stuff. I have a nice car, bought my wife a nice car just about a month and a half ago. But we're not in this kind of stuff. All right. So let's leave premium brands and get into energy. And it looks like you have some companies you had in mind. So you have oil and gas, KMI. Okay, yeah, let's take a look at it. So I'm gonna look at the sector, and then we'll drill into oil and gas and kind of go over that way. I've been an investor in an integrated oil company for a long time. And one of the reasons is my first job out of college was to go work for a fully integrated oil company. That was a good experience. And the energy sector, I should say, is kind of split up. You have what they would call upstream. They explore and they extract the oil out of the ground. You have midstream, transporting the crude oil and the kind of like the raw material, from where it was extracted over to either the refinery or they export it. You have equipment and services, integrated companies, which are the big ones, Exxon, Chevron, refiners, and then drillers. These are contractors that oil companies will hire that will drill into a particular reserve and look to tap into the oil that's underneath the ground. Now we have uranium in the category as well, and then coal companies. And this space has not been working. If we look at the 1 year, midstream has worked a bit, but you can see the integrated players, it's been negative 4%. And that's where most of the money's at, right? Here's the market cap value. This is where Chevron, Exxon, the big oil companies are here. The midstream is here, and it's been doing okay, 35%. So that's been holding its own. And midstream could be that these guys own the pipelines, so they're not subjected to oil prices, and they don't get affected if it's low oil price. They're getting paid to move oil. So the oil could be worth $200 a barrel. It could be worth $50 a barrel. They get paid to move that oil. So they've been able to sustain their revenues far better. It looks like they've done better in the 1 year. All right. Thermal coal has done better than oil. So this space has not done well. And it's really, the oil business goes with where oil prices and natural gas prices are going to go. And right now, oil prices are sitting in the high 60s, and they've been there for a while. And it's just, it caught some excitement when Trump was expected to win, and then he won. The oil sector really rallied because he's going to be a friend to big oil. But then it really, faded. And you could see that in probably a couple of oil companies. We'll take a look at Exxon. Exxon's the biggest company in the space, $467 billion. And you can see that the company for the year up 4% with that dividend. You made it through the year at 8. You're up 8%, but it's faded recently. See this fade here, and you see how it started to rally when Trump was expected to win, but then it faded. So the oil business has not been great compared. I mean, especially compared against technology and other sectors, it hasn't been a great investment. And I'm an owner of Chevron stock, and I'm just not satisfied with the return on that particular stock. Now, looking forward, they will have the ability to operate more freely and probably have a friend in the White House. And right now, the Republicans are going to control the White House, the Congress, and the Senate. They ran the table. So that's got to help oil companies, I would think. And oil companies do create jobs. So it's always a pretty good motivator. And a lot of the Republican states are usually the ones that are trying to drill more. So I think the political environment is probably good for oil companies. I think that's going to be a positive for them. Now, the price of oil is going to dictate whether these guys are really going to be really profitable or not. And that's tough to say, what's going to happen there. So, energy, I don't know what to expect in 2025, 2026. I'm expecting modest kind of returns. And, I'm going to sell a little bit of my Chevron stock in 2025 and try to control my investment in energy because it really didn't get it done in 2024. And 2023 was okay, but it wasn't all that great. All right, so let's look at some of the symbols you put out there. KMI. So Kinder Morgan. So up 54%. They're part of the midstream business. They're part of that space that I was talking about, that they get paid to move oil. So they don't not subjected to low oil prices. And they've done well. I mean, up 54%, that is great. And then you get paid that dividend. What's interesting is over the 5 years, it's only up 28% because it really came down going into COVID. But this year, it's done really well. So Kinder Morgan. Now, are they going to keep doing this well? I don't expect a lot of upside at it, Kinder Morgan. They own the infrastructure, but I don't think it's going to grow very much. They get paid to move oil, and that's it. In fact, look at the revenue growth. That is interesting. So their stock did really well. Meanwhile, the revenues were going down. So I wonder why. Why is it that their revenues were going down, but their stock price went up? The gross profit was where it's supposed to be. Free cash flow is there. Yeah, there's no way I can value Kinder Morgan up to their current market cap. I would fall short. I think they're worth 25 billion or so. And these guys have a pipeline, and they have to put a lot of capital back into that pipeline to make sure it's operating well. It doesn't create a natural disaster. So this one here, I think the best days are behind them. I wouldn't expect they're going to do all that great going forward, because even if you had a high oil price, again, they don't participate in that. I don't think their volumes are going to go up very much in 2025, 2026. So these guys are going to be just flat to no growth to negative growth. And I don't see how that would be good news for them. I think the best is behind them, and they're probably going to settle down, and that stock price is as good as it's going to get, is what I'm seeing. That's one investor's opinion, but that's what I'm seeing. And the other symbols you were looking at is ENB. Let's take a look at ENB. So Enbridge. Enbridge is up 16%. That's very good. Midstream. So you're picking like the part of energy that has been working because they're not dependent on a higher oil price. They're just moving oil. And Enbridge is a $90.1 billion company, or call it a $91 billion market cap company. PE looks okay. Dividend is really high. And is Enbridge, checking to see if it's one of those limited partnerships. Doesn't look like it's in limited partnership. When you invest in energy, and if you invest in pipelines, you might be buying a limited partnership, and there's positives and negatives. The accounting at year end is a little bit of a pain in the neck, so just be aware of that. And but this one here looks like it's just a normal stock, so that's good. These guys did well, 16%. Yeah, that dividend, you're doing quite well. Over the 5-year, not so good. You're basically close to even. So we're not seeing a lot of great long-term wealth creation in the energy sector. We're seeing that these energy companies are kind of just holding their value over 5 years. And that's part of my concern with energy is, well, I'm better off investing in other sectors where over 5 years, I'm really creating, increasing my wealth by owning those stocks. Energy, if it's just going to do this, no thanks. I think if I want flat and, nice income, I'll go buy bonds. But I'd rather be in things that are really going to grow. So energy is not a great place, in my opinion. I don't think it's going to change in 2025, 2026. And I'm happy to read your comments and see what you think. So we looked at Kinder, we looked at Enbridge. Now let's look at CTRA. Coterra Energy. So these guys are exploration and production. Okay. Over the 1 year, they're down 4%. Over the 5 year, they're up 40%. $18 billion market cap company. And the PE is really low. So these guys are exploring with lower oil prices. They can't make the kind of revenues they were making before. Like in 22, we had a nice oil spike, and you could see their growth really goes up. Profits go up when oil prices are up. But that is the oil business. It really depends on that oil price. Margins look good because they're extracting oil. It was very good in 22. They're still making money, which is good. So free cash flow, 1.124 billion. Their market cap is 18 billion. I mean, if one wanted to own an oil company, this one could be a good option. I've always, I've bought into Chevron, and at certain times it's just looked like a genius move because when everything else was going really bad, Chevron would be doing well. But it's been a while since Chevron stood up tall. But I take that back. In 2022, Chevron did look really good, while a lot of my technology stocks were just doing really, really bad. So it is somewhat of a contrarian move to buy into energy. It does well when the rest of the economy is doing poorly, it seems. But when the rest of the economy is doing great, like technology's been just doing great, it's really left behind. And investors just flock to those big names in technology. That's what's been happening. And I don't know it's going to turn around very quickly. So thanks for asking about energy. Yeah, with Trump, I think wealthy people are going to do quite well. So EV stocks, now that's a space that I want to talk about. I am interested in EV stocks because I think that let's take a look at, am I looking at the right one? Zeker. Yeah. Okay, good. So kind of set the table for EVs. So obviously EVs in the United States, they have sold in very high numbers, and electric vehicles make a lot of sense for a lot of countries. Now, the Chinese are making EVs that are far more affordable. The Chinese are very good manufacturers. They also can really put a lot of technology into products. So their EVs are really looking good. And I'm not necessarily saying, oh, Chinese EVs are going to sell well in the US. I think I'm expecting that they're not going to sell in the US at all, but they will sell down in Mexico, Colombia, Brazil, in Latin American countries. And I think that's where the opportunity is for China, is selling their EVs around the world where people have less discretionary income, but they want a car. And the manufacturing advantage that China has with lower cost of labor and really the ability to manufacture well. That shouldn't be lost, is manufacturing is not easy. There's a learning curve involved. The Chinese, I think, are probably going to be a dominant figure in EVs going forward. And again, we may not see it in the US because we have high discretionary income. We buy Teslas, we buy really cool cars. But in other countries where they have maybe 10 to 20% of what we would pay for a car to buy a car, that's where the Chinese, I think, are going to do well. So this company here, we're going to look at Zeker. We're going to look at that company. Xpeng. All right, cool. Okay, so let's take a look at these companies. So this company is producing EVs and batteries. And one more comment before we start rolling. Other than EVs coming out of China, I'm not all that interested in the car business. And the reason for it is um, automotive, the automotive manufacturing has been around for more than 100 years. The competition is global. Like, you got competitors everywhere. It's just a really tough business. And as you'll see, maybe the margins for these EVs will be better, but margins with like the US producers, the margins are not very good. So since we have the choice of investing in thousands of stocks across, the different array of sectors and industries, I pick the industries that are just more attractive, high margins, they grow better. They're just new generation sectors, new generation companies that are here to stay and are going to continue to grow. Car businesses are not that. So, but I think the EV market coming out of China is interesting. Market cap 7.36 billion is their market cap. They do more revenue than they do that market cap. And FYI, that is normal in the car business. So these guys are a strong buy, but just barely discounted. They're not profitable. Let's take a look at their growth. So this is going to be in the Chinese currency, which is, I believe, 0.14 of a US dollar. And the revenue has been expanding well. So if I just kind of round this up to 70 multiplied times 0.14, that would be about $10 billion of revenue. Okay. And cost of revenue. See how the cost of revenue is pretty high. Gross margin is 15%. That's one of the reasons I don't like the car business. The margins are terrible. They don't have any free cash flow. They did last year, but not this year. So this is a going to be a growth company on the top line, but they're not going to be able to keep a lot of that profit because their gross margins are really bad. They're losing money. So I think the Chinese government would be happy to dominate the EV market, but they don't mind losing money, I guess. And it's government, so government tends to be inefficient, so they don't really understand profit. Uh, Maybe they do, but they just don't follow principles of being profitable. And these guys are going to chase the car business because it creates jobs, and they're probably going to support their industry as well. This doesn't look like an attractive investment to me. The margins are really low. The growth is really good, but there's no profit there. It's like, great, we sold a bunch of cars, but we didn't make much money. The high side of an analyst, 3 analysts cover it, and he thinks it could go up to $34 a share. Well, that's not a whole lot of gain. Low side is 26. This isn't really getting me excited. And if I'm going to invest in a Chinese company, I'm in the US, I want a greater rate of return. So I'm probably going to have a tough time just getting these companies to value at their current market cap because I'm going to use a higher discount rate. So these companies, these guys are going to grow, but they don't have a whole lot of margin. So this would be a total pass for me. This one and Xiaomi, I guess, is how I would pronounce it. It's probably wrong. So they do smartphones. I guess they're getting into cars. Okay. $105 billion in market cap. Well, that's a pretty big market cap. Yeah. Revenue is 47 billion. P ratio of 38. So these guys do phones as well as they'll eventually do cars. So that might be part of their valuation, right? And this is 0.14. All right. So this is going to be about a $50 billion revenue company in US dollars. They're growing nicely, 25% in the trailing 12 months. The quarterly looks really good. Their growth is really accelerating, which looks good. When we look at their gross margin, 21%, a little better than that other car company we saw, but it's still fairly low. 21% is not very good. And their free cash flow is 17 billion yuan, and 0.14 is the factor there. So that gets us about, I would say about $2 billion in free cash flow. And I'm not getting anywhere near this valuation. So this one here is just, I'm not sure how it can get to $105 billion. Might be because of that smartphone business is really appreciated. But I'm just not going to touch something like this. The margins are too low. The free cash flow that's produces is not very high. And so the cash flow is $2.41 billion. So if I multiplied that times 20, I would get to about 50 billion in market cap. That's probably where I'd want to set my limit. So I can get to about 50 billion. That's assuming they don't have too much debt on the balance sheet. So I'm striking out. I think they're going to grow because the Chinese government's going to stand behind them, but they just don't make a lot of money in the car business. So yeah, you can really have a great top line, but you don't make any money. This one here, Xpeng, is a 12.6 $1.31 billion market cap company. Revenue is 5.39. And when we look at their profit margin, 15. But previous year, 33, 34. It's all over the place. This is concerning. How could it be negative 200%? I guess because when they were first starting out, they didn't have scale. But now they're losing money. They're losing money. They can't even get back their prime costs, which would be like materials, direct labor, all the direct inputs in the car itself. They can't get that back. So that's a big money losing situation for this company, Xpeng. Oof, not good. Not good at all. All right. So do they produce free cash flow? No, they don't produce any free cash flow. They lose a lot of money. They have a little bit of debt. They have some cash. So that's good. This one here is not an investment I can make. They don't produce free cash flow. They're not profitable. So there's a big question mark on them. And they're losing money on, they can't even get their prime cost back, which is, you put components into a car, materials, the direct labor, direct overhead for that product, and you can't get that money back. That's a big concern. So, yeah, so it looks like the EV market, to me, from my point of view, is not investable. I'm not going to invest my money in that space. And so BYD, yeah, I've looked at BYD, but it doesn't look like a good investment. I think we're going to end up in the same place. So I know that we just went over some companies that are undesirable. So let's kind of go back and look at some sectors that I think are desirable. And about a week and a half ago on the investor conference call on a Saturday, we started doing some screening, try to get some good companies that are just have very good fundamentals and really would value very highly. We ended up here in biotech and high growth pharma. That's where there's money to be made for 2025 and 2026, because there are some companies. Let me see if I can get that stock screen. So let's do a stock screen and kind of find what would be good companies to invest in. And I see that more people have joined. Great to see you guys. Thanks for joining. Feel free to ask, if you want to look at a stock or there's a topic you want to cover, feel free to ask and we will cover it. All right. So what I wanted to look at is, so I'm going to go with the PE ratio. I want a lower PE ratio. And I don't care what market cap it's at. And I want a free cash flow yield of a certain amount. And sector's fine. It could be any sector. So we have free cash flow and we have free cash flow, PE ratio. I don't care if they pay a dividend. I don't care how many shares are outstanding. And I want it to be growing. So I want revenue growth. And that should be pretty good. So total debt. I think that should get us what we need. Okay. So that is what I'm going to go with. Now I've got these filters. So with the PE ratio, I'd like to be, let's say, under 20. That took the list from it being thousands to 1,400. And now free cash flow yield, right? So that's how much cash we're getting. And I want it to be over 5%, got it 853. And I want the company to be growing. And I want it to, I'm going to be conservative, grow over 5%. So now we have 305 stocks. Well, that's still too many. We got to keep slimming down the lead or the list, excuse me. So under 20, okay, that looks okay. Let's see. Yeah, I'm going to leave it at under 20. And maybe I can do so so over 5%. Okay, I'm gonna leave that there. And then I'm gonna go to 10% on the growth. So now we're at 184 stocks. Okay. Guess I'll increase this to over 10. Now we have it at 112. So let's look at what we've got here. And this should give us ideas of where is their value, because these companies are growing their revenues, which is good. They have very good cash and they have a reasonable PE ratio. So on the top of the list is, and this is going to sort it from the biggest company to the smallest company. And this is 102 stocks. And companies like Progressive has been doing really well. I've covered that a few times on my live streams and it looks really good. Chubb, Financial Services. This is a Chinese company, PDD. This is a Japanese company, Mitsubishi. Chubb, Financial Services. This is Financial Services Insurance, Financial Services Insurance. So the insurance companies are looking good and they've been doing really, really well. So they produce free cash flow. They produce very good growth. What's another factor that I want to put in here? So forward PE, market cap, I don't care about that. Earnings yield, don't need that. So let's go with gross profit. That'll help us thin down the list. And I only want to see, and that's the wrong gross profit. I should have asked for gross profit in a percentage. So give me a minute here. I'll get the right gross profit. Gross profit growth. Oh, here it is. Gross margin. Okay. So gross margin. I want to look at companies that have gross margins above 50. So now we're down to 38. Okay, good. So now we're looking at, this is a Chinese company, Pinduoduo, Markel Group. This is insurance, back to insurance. Wynn Resorts. So now we're down to a list of, financial services, XP. Not sure what that company's about. So this is maybe one way of trying to create a list of companies to look at. I've looked at Harmony. This is a good company. I haven't invested in them, but they really have good value to them. NextEra Energy is in there. So this screen kind of got us to a pretty good list of maybe doing some homework on that could reveal maybe a company or two that are worth following and maybe at some point investing if it fits all the investing criteria you're looking for. So yeah, so there's a couple of sectors. And if you look at the industries, maybe I could sort by industry. So the industries that came up on that screen: asset management, financial services, biotech. So Harmony, Innoviva is how it would be pronounced. We got more financial services. Financial services did great in 2024. And it looks like they're doing really well. And this is a drug manufacturer. Back to growth pharma, education, and then double down electronic gaming. That looks interesting. Financial services and insurance. So a lot of financial services in here, a couple biotech, and then one gaming company. So Android PC, thanks for checking in, man. Thanks for tuning in. Happy holidays. Merry Christmas. So those are some companies to look at. The one that, you know, I like I like looking at gaming companies, I guess because I like video games. So Double Down Interactive. Double Down Interactive engages in the development and publishing of casual games, mobile applications in South Korea. Oh, cool. Small, tiny cap. Revenue looks okay. Very small PE. And they are growing in the most trailing 12 months. They're growing. But this is not investable to me. It's in South Korea. It's super tiny. It's just too risky for me. Carlos, thanks for showing up, man. And good spike in the market today. Yeah, it's the Santa Claus rally. Nice to see stocks go up at the end of the year. And they go up like 74% of the time they go up like this. And when there's an election, 83% of the time. So it was, chances were that we were going to rally at the end of the year. It's good to see it. We'll kind of finish off the year. And I have a feeling that January is going to be a tough month. We'll see if we have a good sell off. I've been selling some of my stocks, creating cash. It's just getting ready in case we have a bad January. I got lots of cash to buy stocks. All right. So that was Double Down. It's not investable because it's in South Korea. So you guys in the chat, which symbol do you want to look at off this list? Anything kind of stick out that looks interesting? So this company here, Harmony. Oops. So this company, I think, has been doing well. It's up 6%. It was doing well. I reviewed this thing months ago and it was doing far better. It's really come down. Market cap's tiny. It is a small company. PE is really low. This is low. They're growing really well. Their growth is maybe slowing down. That's what investors are worried about. But it's still growing at 16%, which is good. It is a small company. And this is a good acquisition target for a bigger pharmaceutical company. They produce really good free cash flow, very good gross margin, 78.65. Remember how we were looking at those car companies going, man, they barely make any profit, 15% gross margins or negative gross margins. Then you have this little company, 78.65. And companies like these, I'm pretty sure I have Harmony as a stock that I've already done analysis on. And even with a really high discount, I get a discounted share price. I'm already invested in two companies that are similar to this one, but it just shows that there's value in the biotech space. Now, I haven't heard of this company. So Innoviva, development, commercialization, pharmaceutical products in the U.S. and internationally. It is a small company, $101 billion market cap. They are profitable. They had hit a bad couple years. Yeah, this one doesn't look good enough. It's not mature enough. Well, take that back. This one might be interesting to look at because when this one takes off, it's going to take off. They grew 33% in the most recent quarter. So let's dive into this one a little bit. So this one here, Inbom. So I'm going to go to the investor relations page for Innoviva and try to get to their financials to see what's going on with their revenue growth and see where they're at. So here's the 10Q. And so while we're at it, so they have the cash balance is going up. Very good sign that they have the ability to create cash for themselves. And how much debt do they have? Long-term debt, 255. They have about the same amount of cash. So good, solid balance sheet. I'm looking for a balance sheet that they could pay off all their debt in less than 3 years. And you measure that by looking at the net debt and compare it to EBITDA. EBITDA is your ability to pay off debt. In this case here, they have enough cash on the balance sheet to pay it off immediately. So obviously that is a strong balance sheet. So for the 3 months, it looks like they're really selling on revenue. They have licensed their formulation, the drug that they've created, and many pharmaceutical companies are licensing it and then producing it. And they had the royalty income is somewhat stable. And then they had product sales on their own, which is growing really nicely. Then they have some license revenue. Well, that looks good. So really nice growth in the last 3 months. So that really catches my attention. This might be a little company that is going to start to really see their stock price go up. So 1 year, it's up 9.62%. So the IPO'd, I don't know when they IPO'd, but 9.6. Yeah, these guys look interesting. So the revenue growth looks really good to me. They're growing really, really well. And they're making money. They're a smaller company, but they're making money. Okay. So this is an interesting little company. This is a space that I think is working. Like if you look at a comparable company is Catalyst Pharma. You know, it's 2.5 billion, 460 million in revenue. They are in the same space, biotech. They keep growing the revenue really well. Real solid growth. They produce cash, and the stock's been working this year, up 30%. The 5 years up 460%. So this is probably my best performing stock in this sector, in this particular industry. So this one doesn't quite line up as well as Catalyst. I'd probably just put more money into Catalyst. Catalyst is getting it done. And Harmony is really good. I've considered buying into Harmony. I think that's a good stock. All right. Android PC. Tesla stock is at 465. Too bad I sold early but hey, at least I got something like profit, 10% profit. Yeah, um, the Trump presidency, I mean, it's going to be good for stock investors at large, right? We're going to pay less taxes and so forth. And I think some areas like healthcare, I don't know how the Trump administration is going to affect healthcare. Um, Energy, you would think that energy would be really rallying and continuing the rally, but it hasn't. It's kind of settled down. So we'll see. I think some things are to be determined. Um, but I make money whether we got a Republican president or a Democratic president. Um, that's not going to stop me. I'll invest where the investing is good. So next one. So, and then before I jump into AZN, yeah, there we go. So, you know, one thing that I try to remind myself is whether I made money or lost money, and hopefully most of the time I'm making money, is try to learn something. Because if we become better every month, every year, we just become better at making money. And that's really that's what I would leave you with is you were smart enough to buy Tesla, and that's good. Not hanging on to stocks. I think I'm also guilty of selling some stocks too early. And my biggest blunder, I guess, was selling Broadcom too early. But at least I was smart enough to buy Broadcom, and I made some money on it. And maybe it teaches me that, hey, I'm going to hang on to Robinhood. I'm going to hang on to Coinbase. I'm going to hang on to Meta because that one that was kind of painful to let go has made it so that I'm going to stick to my other stocks that are just absolute winners. Okay, AZN. Let's take a look at AZN. AstraZeneca. This is a British company, pharmaceutical, $202 billion in market cap, $51 billion in revenue. PE is a little high this year, but next year it's going to drop to 14. They have been growing very nicely, 13%. Very nice in the last quarter at 18%. What's the stock been doing for the year? Nothing. Last 5 years, okay return. Pharmaceutical companies have not been receiving a lot of love from the market. The market has not treated them nicely. For a while, they treated AstraZeneca nicely, and then it sold it off. So, is there a class action lawsuit going up against AstraZeneca? Who knows? So, you'll have to read that. Make sure if you consider being an investor, you got to make sure you know if there's any really bad surprises out there. So AstraZeneca is a really good company. They've been around for a long time. They're driving a lot of revenue. They're growing their revenue, which looks really impressive. Analysts think it's 34% discounted. At some point, these healthcare companies are going to start to rally. I don't know when, but there's just good value available in pharmaceutical companies. When you look at these companies, right, it's growing their top line. Let's look at their margins. Gross margin, 82%. That's really high margins. I like pharmaceutical because of that. Really high margins. They produce cash. Good company. So AstraZeneca looks really, really good. So I'm going to take a closer look at AstraZeneca. So what has been keeping the stock down? So the stock started to go down around the August timeframe. So where there's stories around August that led to the big drop. Let's see if we can. Nope, it's not going to give it to me. All right, let me see if I can get Meta AI to help me out. So let's see if AI is going to come to the rescue here. What were the negative stories that came up August 2024 for AstraZeneca? See if Meta AI. Well, couldn't find anything. Let's see if Gemini can do it. So the Chinese authorities are investigating AstraZeneca for alleged fraud, illegal drug importation, personal information breaches. Okay. So that's where the news is coming from. All right. So what's going to happen there? I don't know, but that's the negative press. I still think AstraZeneca is investable. It's just a good company. I like these big companies that are going to give me a good rate of return. So AstraZeneca is a pretty good idea. And they're going to pay a 2.24% dividend. It's really pulled back. If the story with the Chinese government investigating them goes away, that positive surprise is going to kick the stock up, 10, 20%. So this is a good one. So let's see here. So we have some comments coming in, but I'm thinking I want to do a quick valuation on AstraZeneca. So let's take a look. So here is Harmony Biosciences. Actually, you know what? I think I'm good. The reason I'm not going to do it is I have one of my goals of 2025, I guess, since we're almost done, is I'm going to try not to get too many companies in my portfolio. And I have a winner. I think I'm just going to put more money into these and just call it a day because these are just been working. So I'm just going to feed my winners and go from there. Yeah, I think I'm going to do that. And I know Pfizer is beginning to work, so I'm going to probably put more capital into Pfizer. I think it's a good turnaround play, and just put more money into United Therapeutics and call it a day. So that is AstraZeneca, very good company. All right, so let's see here. Android PC was on top of the Chinese government suing AstraZeneca. Yep. And I think that story will probably be clear. I mean, had a couple of their execs detained and oh no. Yeah, that might be the case that, Robert F. Kennedy Jr., he may be kind of headwind on pharma. I acknowledge that. That could be a thing that they have to deal with and contend with. If anything, just the public, perception is going to be that the government's really putting a lot of pressure against pharma. That's definitely a reality. All right. So, any other comments there? So, all right. So we've spent a little bit of Christmas Eve together, and it's been a good year. It's been an awesome year. I think the market gave us 2 years of awesome appreciation. And, if you need to be convinced that investing is is great. It's exciting. It's fun. It's rewarding. It's just think about if you worked for 10 years and you saved up 200 grand and you had that 200 grand at 2022, you almost doubled that 200 grand in 2 years. So your money was working for you when you were sleeping at night, nice and comfortable under your warm blankets. Your money was working. And that's kind of like one of the things that I think most people that are tuning into this live stream are already probably bought into, which is I like knowing my money is working for me. I like knowing that I get up in the morning and my money has been doing push-ups and sit-ups and getting it done for me and working at night. Because if you put your hard-earned money into stocks, into the right stocks, they're going to pay you back. So for the last 2 years, we've been on this upward trend that is creating a lot of wealth. Wealth is the excess savings, the excess asset level that you have that is beyond your consumption needs. And it's been a fun 2 years. And I think 2025 is probably going to be good. Next 4 years are probably going to be good. So if you need any convincing that, hey, why do I want to save up and why do I want to invest? Is so you can make a lot of money. More importantly, if you don't figure out a way to make money while you sleep, you're probably going to end up working for the rest of your life. And you may want to work for the rest of your life, but wouldn't it be cool if you had a lot of financial freedom and you had enough money where the money you've saved up is invested right and it's making more money than you need and your family needs. And that's really what it's about. So it's fun to invest in stocks. It's fun to analyze them. And it's really fun when we go through a 2-year pattern like we've gone through and we make the kind of money we've been making. My return this year is, from a stock perspective, is the best year I've had in my investing career. I've made more money on real estate, but real estate's a different game that I'm going to talk about later, or I'll talk about it on a separate occasion. So that's, when I was a youngster, I'm 56, and I don't know the ages of the attendees out there, but when I was in my 20s, I kind of looked, toward, people that I thought, they had it together and asked for their advice. And I think they all suggested, having, good savings and investing with a purpose of growing one's wealth. I'm really glad that I listened to those guys because I've done really well over my career and my lifetime. So that's my little pep talk on continuing to invest. And if you continue to become better and better, you'll become better and better investor in finding companies that are really going to grow your wealth. Or maybe like in real estate, you don't become a good real estate investor by just reading books and not trying it. You have to get out there and make some deals, and then you get good at it. Same thing with stocks is try to have, an area in the stock market that you really understand, that you can really invest. It might be a couple of industries that you really understand. That'd be cool. And then you can learn another industry over time. And then you become good at it, over time. Android PC. Awesome, man. I'm glad you had a fun time. Hopefully you made a lot of money because it is really fun. And, the thing about like stock investing is, how we will watch sporting events and like the Super Bowl is a good example. And you'll see the winning team, they couldn't be happier. It's like, oh man, super happy. And the losing team couldn't be any more miserable. It's like, oh my God, this is the worst thing that ever happened. And I would say that every player on the field is really happy that they're in the game. They're in the game to either win big or lose big, and they put themselves out there. And I think when you week after week, month after month, save up, put money in the market, then watch your money grow, you're in the game. So that way, when let's say you are an investor in like a Palantir and it just takes off, it's just really rewarding and it's gratifying. It's like winning a little Super Bowl in your own life. And of course, when you have a stock really tank, um, let's say in an Intel, it hurts and it's supposed to. But try to get a lesson out of both scenarios. Your big wins, your big losses, try to learn, because the more and more you learn from each experience, the better you're going to get. So, for me, I've had kind of cycles of, I used to be really concentrated with my investing. Then I became quite diversified. And now I'm beginning to tighten up the belt on, I don't want to be over diversified. I want to be really focused on some key industries. And because that's where the money was coming from. And it's like, the heck with industries that are not making money for me. I don't need any of those. I just want the ones that are really just, helping me stack the cheese, helping me just continue to have the cash flow I want. So, so it's been a really, really good year. Since it's Christmas Eve, we can kind of reminisce on, Santa Claus has kind of been delivering all year long. And what's been interesting about this year is that it was quite smooth, and the Nasdaq's a little rougher than the S&P. But if you look at the S&P, it was pretty smooth. We didn't have any big pullbacks. We had a kind of a modest one here, pulled back like 8.5%. That was the worst pullback we dealt with in July, August. Rest of the year is somewhat smooth. I mean, these are years that, we shouldn't take for granted. There was an era like 20 years ago when gains were not as good as they are today. And now, I mean, we are like in a golden age of investing. Just over 5 years, the S&P is up 86%. That's phenomenal. Yeah, Carlos, glad to talk about that. And what I would probably say is I'd probably want to cover my best and worst for 2024. I mean, you just gave me an idea. Maybe that would be a good live stream, the best and worst of 2024. And the reason for it is sometimes, like when I hear a story of, oh, this person in 1985 had this really good winning, investment. That's a long time ago. Let's talk about a company that's more recent that we could all get our heads around. So I'll put that out there, that what was my best investment for 2024? What was my worst investment for 2024? I'm pretty sure it's going to be Intel for 2024. And my best one will be probably be like Robinhood, because it just did really well. I saw it coming. And the reason I feel good about that one is, I invested in it when I think not a lot of investors were seeing it. I saw it, and I'm up really nice for the year on Robinhood. There's a couple others too that are out there that were just really good winners. But Robinhood's up 200% in 1 year. So I really like how I was able to see it, invested before this all happened, and my investments just really flourished. So yeah, I'd be glad to go over that. I like GLP-1 and AI, SIMMYs. So when you say GLP-1, so I know AI and semiconductors. What does GLP-1 mean? I don't know if you're abbreviating that. So most definitely the AI space is booming. Semiconductors is booming. Totally. You still have Intel. Oh man. Yeah. It's interesting. Intel, oh man. I was really disappointed in the management team there, but those guys are just a mess right now. We'll see how things play out. Hopefully the stock rises for you and you can get, if anything, make money on it. All right, cool. So that was a good live stream, everybody. Thanks for tuning in. I think I'm going to wrap it up, and I really appreciate you guys tuning in. And I'll try to live stream tomorrow. I'm going to probably have a morning live stream and then an evening live stream like I'm doing right now. And we'll just kind of cruise and go over some stocks. If you're interested in kind of talking through stocks and investing, consider being a paid member. We do this, but we have conference calls on weekends so we can really talk through things and kind of go over things, go over stocks. And it really is, I think, very useful for investors. And you could participate in that if you become a paid member. The details are in the description on the live stream if you're interested in that. We do that on weekends, and that way people can attend. And so I would put that out there. So yeah, okay, weight loss. GLP-1 weight loss. Got it. Yeah, that's been super hot. So MFA. So MFA Financial, together with its subsidiaries, operates real estate investment trust. Announced a 35-cent dividend. So very high dividend. Man, they really lost a lot of value over 5 years. Over the 1 year, they lost 10%. So you're kind of breaking even, right? Because you're losing value in your stock, but you're getting it back in the form of dividend. And 35 cents a dividend, that's what adds up to $1.40. And they can afford it, but they're paying out a good part of their profits in that dividend. So these guys are, this is a real estate investment trust. Invest in residential mortgage securities, including non-agency mortgage-backed securities. Okay. I think you've brought this one up in the past on live streams. It's really been coming down fast. Huh. So with higher interest rates, right? Or interest rates are going to stay higher for longer. These guys. Mortgage-backed securities. Yeah, this one. What caused this big drop? It was COVID. That makes sense. And then from here, it's been kind of a brutal path for the company. It rallied starting in August, and it rallied pretty well. Then it gave up all those gains. I don't know. This one seems like a little bit of short-term trade. You can get in and then get out, but it's not looking like it's going to build like a higher value company. Their net interest income is here. It grew. I guess they have some adjustable loans. And when interest rates went up, they were able to collect higher interest. As interest rates fell, the debt was refinanced, and then revenues came down. But you could see that Higher interest rates for longer are keeping interest rate income higher, so that's good. Okay, what is this here? So they've gained on selling some loans or part of their receivables. Okay, so there's their revenue. Yeah, this one here, I mean, this one I wouldn't invest in it because it just seems like there's a lot of unknowns in the business. There's a lot of things they're doing that I'm not quite sure what they're doing and when they're going to do it. So they'd probably be surprising me to the negative every once in a while, and they'd probably drive down the stock price, which has been the case, right? They get a bad surprise and stock price tanks. Bad surprise, stock price. And this one isn't their fault. This is COVID, but this one here is just not. It's not in my zone. I would just stay away from it. If it's something that works for you, great. I can't value this company because it's all over the place. The data isn't very good. This is kind of like purely a financial, more like a financial services company because they're doing all these mortgages. So Michael Anthony, you're a regular, man. Thanks for tuning in. So HLF is at support, which means 0.57 over 0.31. All right. So HLF. Herbalife. Yeah, I know who these guys are. Wow, man, the 1 year's. Man, that's a brutal chart. Ooh, painful. It's like rated R. That is pretty bad. Market cap 640 million, revenue 5 billion. PE is 7.45. Forward PE, it's discounted according to analysts. The revenue's been going down, but it's not falling off a cliff. So what is attacking the business? Why is the business just tanking? So they still produce free cash flow. Man, the profit margins are nothing. Like 1.73. It's really low. Free cash flow. Oh, I was looking at the wrong line. Gross margins are actually quite good, 44.85. So the fundamentals look good. Is there a story out there that's driving down the price of the stock? What's causing this to tank this way? So, I mean, I smell value. I smell that there might be money to be made on Herbalife. Now, I personally don't like Herbalife. I think it's kind of uh, it's just not a business that I would feel proud owning. They basically sell powder that's supposed to be a supplement to your diet. Maybe it is. I just don't believe in that stuff. And they're quite effective at it. 5 billion in revenue. I'm just still not getting a gist of what is driving down their stock price. So let's look at their debt. So total debt 2.47, cash is 402, so $2 billion of debt. Their EBITDA is 545. Okay. So that is a little concerning. It would take them about, let's call it 4 years to pay off debt. They just focused on using all their EBITDA to pay off debt. So that is a red flag, but not like a terrible situation. It's good that they've kept their revenue. They haven't been able to grow. gross profit looks decent. They've been paying interest on that debt. So this is the company that short squeeze. So the shorts are really high on this stock. Is that what's going on too? So it's not giving me any short data, but this is the company that Bill Ackman started to short. I don't know if it was 5-10 years ago, and then some other guy that hates him and he hates the other guy got into it, and they started bidding up the stock, and it squeezed Ackman, if you recall. I think that happened like 10 years ago. So this one's interesting. I don't understand why the stock price is down so much when the company's kind of okay and the market cap's like nothing. The revenue is really high. So this is like a situation where the company's going out of business, and it doesn't seem like they're going out of business. The forecast, so we have 5 analysts that cover the stock. They all think it's going to go up. Their price targets are all higher, and they're expecting to grow their revenues. So this may not be a bad idea. This seems like a really, really discounted stock. It's not the right stock for me, but this stock's showing that there's a lot of fundamental value, and the stock price is way below that fundamental value. Could be a place where you can find a stock that goes from $6 to $20 potentially. I don't know if I should get involved or not. I just don't. I like buying companies that I'm like, yeah, I love, like, I invested in Nike. Part of it is that I just really like the Nike business, and I started investing in Nike. I believe in their future. But I'm going to take a close look at Herbalife. And I know a ex-colleague of mine, she did business with Herbalife, and she used to call him Herba Death because I guess they used to really squeeze her for everything that they can get from her. But there's a lot of value there. I don't see why the stock price has just been crashing the way it's been crashing. They are not growing, I would admit that, but boy, the stock price is down 86% over the last 5 years. That's a pretty strong crash. They're generating like 200 million, right, in free cash flow. 180 million, and the market cap is 640. So you're generating like 25% free cash flow from your market cap. So the yield on free cash flow is really high. Interesting. MFA going to make over $6 for a whole year. Cool. All right, cool. All right. Thanks for tuning in, man. Powell spoke last week, and I think, yeah, his speech, it's from what I heard, and let's talk about Powell for a second. From what I heard, Powell was frustrated. He was kind of mad that he was cutting rates when he shouldn't have been cutting rates. And then he said that they wouldn't be cutting rates for a while. I think that inflation is still a problem. And if it rears its ugly head again, it's going to make the chairman look really bad. So maybe he's worried about his image. So I heard he was pretty mad about it. And we shouldn't expect the rate cuts to come from the Fed for a while until inflation really it's proven that inflation is getting or getting to 2%. That's what I have been reading. ACAP Investing. Good to see you again. Thanks for tuning in. So read last earnings, even raise outlooks. You'll bought more shares. Huh. And we're talking about Herbalife, right? Okay. Yeah. Wow. Looks good. Looks interesting. You've been looking at pizza. That's is that Papa John's? Yeah, I like Papa John's. I like their pizza. So the market cap 1.31 billion and revenue is 2.1 billion. Now, when COVID hit, the pizza delivery companies or the pizza companies just went through the roof. Yeah, they really started to go up in value, and then they gave up a lot of their value. I'm not a big restaurant guy. Now, Papa John's would be an exception because I think they're probably going to be more profitable than, let's say, a Jack in the Box or that type of restaurant that has a big menu. These guys have a limited menu. They have pizza and they deliver it. So let's take a look. $40 a share. So PE is really low. It's going to go up a little bit next year. Dividend is pretty nice, 4.59. And analysts say it's really discounted. So the revenue, you can see the growth happened during COVID. Everybody was locked in their homes ordering pizza. And it grew quite well. And their gross profit, that's not bad. So for a restaurant, it's very good. Restaurants tend to be undesirable to me. 30%. I mean, it's not a pharmaceutical company at 82%, but it's 30%. It's better than a restaurant. And their free cash flow is okay, but not great. Yeah, so this is a slow grow, no grow situation where you have revenue growth. Let me look at the quarterly, see if we're seeing any patterns. See the quarterly, you're actually when you go to the quarterly, you're seeing that the quarters are showing signs of declining sales. And the trailing 12 months shows flat, but it's actually sales are declining. And that's what has led to this sell-off is, okay, you had your great period of time when you were growing because of COVID, but now people are sick of eating pizza and they're not ordering Papa John's pizza as often as they were before. And this is just going to be a declining situation. And what can turn things around? I mean, it's tough competition, right? Domino's, you have local pizza shops, you have Pizza Hut. These guys are all battling for people, wanting to order. The other dynamic too is, pizza used to have the big advantage of that's what 20, 30 years ago, if you wanted to order in, pizza was probably up there. There was few options like, oh, pizza's easy. You just order pizza and it gets delivered. But now with like DoorDash and Uber Eats, you can order from anywhere. You can order a really nice meal. You can order anything. And I think that is going to be Papa John's big problem is they're going to become less relevant over time because everything is, you can order anything on DoorDash, anything on Uber Eats. You can order a steak. You can order a hamburger. You can order Chinese food. You can order Mexican food. You can order anything. And it'll compete with people's, when they have an appetite, they're no longer limited to just a few choices from delivery. They have the choice of just about any restaurant in their area, and they can order it up, and away they go. So I'd pass on Papa John's. I like their pizza, but I don't like their future prospects. I think that stock's going to continue to decline. I just don't see what's going to help their stock get picked up, and I think the revenue is going to continue to decline. So that's the Papa John's, and Annette. Oh, Arista Networks. Yeah, these guys have been killing it. So Arista Networks, 92%. Wow. Beautiful charts. If you grow, the market just loves you. Their growth has been slowing down, but the market still loves them. So Arista Networks, and let me get re-familiar with these guys. So they're networking for data center, campus, routing environments. So they compete against Cisco. They're not as big as Cisco. Cisco's like 8 times bigger, maybe 7 times, maybe 5 to 6 times bigger than this. But Cisco's not growing. I sold all my Cisco shares today at a gain. So I did well with Cisco. And free cash flow looks good. Gross profit looks good. Just the best valuation I can, put on a stock like this is probably the free cash flow with their current growth. Let's say I'm at 75 billion, which would be like 24 times that free cash flow. And this thing's like double that. So this thing's priced really high. And somebody's going to be holding the bag because their revenue is slowing down. Okay. It's slowing down. It's just not an expression. It's mathematically right here. When they start hitting single digits, investors are going to look around and go, I'm paying how much of a PE on a single digit growth company? And they're going to start selling their stock. But for all those who have been in Arista Networks, congratulations. It's been a hell of a ride. Maybe they can continue to grow by acquiring some businesses. If they're smart about it, they can acquire them now so they can keep that growth going. But so far, it's been working. I salute you, Arista Networks. Great job. And there's been other companies that have kind of shown this. Like I remember that Juniper Networks was pretty hot for a while. These guys, they've been getting it done. Really, really cool stock. So Arista Networks. And what are analysts saying? Like, see, even analysts some of them are like, hey, this is overpriced. On average, it's overpriced. What's interesting is the last 2 years, we've had stocks that have been moving up. And especially, I think a couple years ago, it was like, hey, we expect this recession in 23. Didn't come. Okay, it's going to move to 24. Didn't happen. And now it's like nobody's talking about a recession. So we're just going to keep growing at a slow rate, but we're not going to have kind of a boom cycle. We're just going to have a slow cycle, so to speak. So maybe Donald Trump's going to like do something to really grow the economy. But the reason I bring that up is networking is going to grow when businesses grow. If somebody has to create new offices or a new campus or something new, they're going to need more infrastructure and they're going to go buy it from Arista. But if there's not a lot of growth, there's not going to be a lot of new opportunities for Arista. So we'll see how things play out. But so far, it's been great for investors on Arista. Hey, good to see you, Falls Grave. How are you? What do you think of MicroStrategy? Well, I think I think Michael Saylor is like the man. And FYI, I was listening to him talk years ago. So I'm a Bitcoin investor. And I did invest in MicroStrategy for a short period of time, but then decided, I just want to buy Bitcoin. I'm an investor in Bitcoin, Coinbase, and I also own Ethereum. My Bitcoin's done great. I'm going to move up on the camera. I'm wearing my Bitcoin shirt. So I'm Bitcoin. I've been buying Bitcoin since 2018. So Michael Saylor, I think the guy for the last 6 years, 7 years, at times, I think he was dismissed as being like completely out of his mind. And at certain points, people have, considered him kind of like a fortune teller. Like, hey, that guy knows the future. For sure, his company has really benefited from his leadership. The company has flourished. Okay, and buying into MicroStrategy are almost like you're buying Bitcoin under leverage or using leverage, where you're really buying a concentrated position in Bitcoin. I don't know that it's the right investment for everybody, but the market cap of MicroStrategies is 77.45 billion. Not too bad. The revenue is, I think, tiny because they are before Bitcoin, they were a software company, and they do analytical software. So that is also kind of a skill set that they have as a company, is they can probably model Bitcoin and so forth quite well. But these guys are still a strong buy according to analysts. I would I wonder how these guys do their valuations, because Bitcoin, you don't have any income with Bitcoin. But these guys are saying, hey, earnings per share. So 25 earnings per share is going to be 22.64, but then they're going to lose $87 a share. How's that going to happen? And the reason I laugh is that you really, when you, in my mind, Bitcoin is very hard to put a value on. It's just a scarce store of value. And you're almost betting on the fact that a digital store of value is going to be worth more in the future. And that's my investing thesis on Bitcoin. And so far, it's played out that way. So MicroStrategy, I think, should be played the same way, which is, if you think Bitcoin is going to be worth a lot more, MicroStrategy is going to be worth a lot more. And that's certainly been the case over the last couple of years, especially this past year. I think Bitcoin, now that it eclipsed 100,000 per coin, I think it's going to get to $500,000 per coin in the next 5 years. And I think most definitely that's the path it's on. And you think about Bitcoin and where it's been. It used to be worth nothing, zero, zilch. I started investing way back here, and we had a big sell-off. And over time, it's proven to continue to go up in value, and somewhat deal with a lot of like the doubt and the naysayers. Like, if you look at like Bitcoin and the stories you were hearing, like, let's say in 2016, the responses to Bitcoin were, what's Bitcoin? Like, people just didn't know what the heck it was. Like, what is it? Then there was stories around, well, that's what, they use on the Silk Road, that, dark website, that the darknet website, and all those things may have had some truth to them. But as we move forward and we had the first boom, which was around 2018, and the Bitcoin got to like 15,000. People really paid attention because the gains were just extreme, and people were like, "Wow, man!" Some people became really wealthy because they bought Bitcoins for 50 cents a coin, $2 a coin. Next thing you know, they're worth $15,000 a coin. So the stories then were coming out of the establishment financial services companies who were just bad mouthing Bitcoin. And I thought that was exactly why I wanted to invest. I'm like, so the establishment doesn't want Bitcoin to succeed because it is a digital currency that does not belong to any one government. It cannot be regulated. It cannot be a lot of things. I'm like, that's exactly why Bitcoin's going to succeed. It is truly the maverick asset class. You cannot control it. The more you try, the more you fight it from a financial institution perspective, like a lot of these institutions were just bad mouthing it, the more strength it got, because these were the same institutions that in 2008, Lehman Brothers and AIG, they brought the country to its knees because they made a lot of bad decisions. So these are the geniuses that are now telling us that Bitcoin is a bad thing. What they were saying was, my firm doesn't participate in Bitcoin, so I don't want it to succeed because I don't want investors to leave legacy, traditional investing ideas and go put their money in Bitcoin. That can take, money away from our firm, is what I interpreted it as saying. But you fast forward, it became better adopted. Then we had the second big peak in the 2021 era, along with stocks. And boy, things were getting overheated and things sold off along with stocks. And then it did its latest run with stocks. And now when you look at most brokerages now offer Bitcoin, it is, I'm not going to say a typical investment for people, but I think that most intelligent investors are now realizing that, hey, for a long time, I thought buying gold was silly. I'm like, why would anybody buy gold? I don't like gold. I don't wear gold. And I get that some people like jewelry, but people are like, no, it's a store of value. And, when everything else doesn't work, it's going to help you because it's a diversification asset. It's also going to stay ahead of inflation. I'm like, I get that, but couldn't you get there with something else? Now, when Bitcoin came out, and I do work in technology, I am a fan of, Ready Player One, Martian. I created a vintage arcade up in a cabin we owned in the mountains. I'm kind of a little bit of a, fan of technology, Matrix, all that stuff. So when Bitcoin came out, I'm like, yeah, this thing can work. It can work because it doesn't need general adoption. It just needs enough adoption. It's kind of like if you have 2% of the population on investing in Bitcoin, it's going to be really successful. And it's done way better than that. So as I followed Bitcoin, it's not an asset class that I can show you free cash flows and earnings per share. It's not that at all. But what I could do is point to you like, El Salvador. So the country of El Salvador has been run by this dude that is president or prime minister. And he's done some things that have been really so the El Salvador president is an educated guy, and he solved a lot of problems for that country. And El Salvador for a long time has been troubled, and I'm just going to focus on the economics. But before I get there, I will comment on when he took over, El Salvador was really dangerous. There was a lot of the gangs in the country were kind of running the country. So he cleaned it up, and he did it through force and through incarceration. And now the country is in decent shape. And I don't think he had another, and he had no other option. So he did that. So historically, in Latin America, countries would peg their currency to the US dollar, and then they would set their fiscal policy accordingly. And what would oftentimes happen was their currency would get devalued, um, because the dollar would gain strength, or their country was perceived to be weak, and their currency would lose value, and their currency would lose purchasing power. And a lot of the purchasing power was in the form of dollars. So year after year, these countries became uh, poorer, year after year. So this guy he put their fiscal policy on Bitcoin, which was like, oh my God, either this guy's going to be a genius or he's going to be the biggest loser in politics. And he ended up being a genius because his investment in Bitcoin it's been such a success for El Salvador. So back to use cases of Bitcoin. This is an obvious win for a country that needed some luck to make it, to make it through a lot of the challenges it has. But you are seeing other countries in Africa thinking about the same thing. I think there's one other country in Africa that's thinking of doing the same thing. This is all creating demand on the Bitcoin. When demand is placed on the Bitcoin, its price goes up. And then you have stories also. One of the community members that we talk on weekends, he's in the country of Argentina, and he mentioned that one year they had 100% inflation, which is super extreme, right? I could only imagine how tough that would be. I mean, we were dealing with 9% inflation, and we were really feeling the pain. A lot of folks were feeling it, but imagine 100%. Holy smokes. So he commented that people are trying to get to Bitcoin wallets and putting some of their money in Bitcoin, because that's one way of keeping their money in a currency that's going to stay ahead of inflation. If they keep it in their currency in Argentina, of course, the Argentinian government wants them to keep the currency that they issue, and it's against the law to carry anything else. But the Bitcoin, if you put it in a wallet that nobody knows about, it's completely, untraceable by your government down in Argentina. That's demand on the Bitcoin. So these things are playing out. Bitcoin hit $100,000 a coin. As soon as it did that, I'm like, this thing's going to 500,000, because when I started investing in Bitcoin, it was trading for like $1,500. It's like, I thought, man, if it got to 25,000, I'd be like super impressed. And it got there quick. And then it got to 100,000. It's going to get to 500,000, in my opinion, over the next 5 years. I could be wrong, but it got to 100,000. So, so I see your comment. ACAP investing. We're going to go over that stock. Let me finish my thoughts on Bitcoin. Man, this is going to be the Bitcoin Christmas Eve. And you also buy Bitcoin Direct. Yeah. And I agree with you that if I own the Bitcoin, right, it's part of my portfolio. Like, I invested 70,000 in Bitcoin and Ethereum. It's worth over 200 grand now. Now that, if you measured overall my portfolio, real estate, stocks and everything, it was less than 2% of my net worth. And it's really grown nicely. But if you go into MicroStrategy, you got more moving parts. And you're right that if you had a really steep fall in Bitcoin, and then MicroStrategies became insolvent, then what happens? It's like, oh, great. Well, your Bitcoin's kind of stuck there, but now your stock price is way lower than the Bitcoin value. And it's just kind of a mess. The one thing I'd put out there is I used to buy Bitcoin from Coinbase. It's expensive. I'm a Coinbase stockholder. So I like when people buy their Bitcoin from Coinbase. But I started buying from my broker because now stock brokers like the Schwabs and the different brokerages will sell you Bitcoin and they are not charging transaction fees, which is a big plus. And my broker does that and check to see if yours does the same. I thought that was a big advantage. So Bitcoin goes up on low volume, can fall much faster in common electron. Yeah, we'll see. I think there's a lot of friends to Bitcoin now in government. It really could. It's going to be an interesting 4 years. Yep. I will be a hodler. And, when I first started investing in Bitcoin, I thought, worst case scenario, I'm going to learn something. And that's why I limited my investment. And then when I started learning more and more, and I started thinking about like, how's the Bitcoin playing in kind of like, the world we're living in today. And 1 second. I am getting over a cold, and I think I'm on the road to recovery, but my throat gets a little scratchy. So I thought, early on, and I shouldn't say early because I started investing like in 2018. Early would have been like 2008, 2009, 2010. But I thought, well, the worst case scenario is I'll learn something, which will be interesting. And but now I really look at it as, Bitcoin it's here. It's around the world. Government, like one government cannot stop it. Even if imagine this, all governments came together and did a common, for a common purpose. That's not going to happen. So like China, this is probably 6 years ago, 5 years ago. A lot of the Bitcoin is being mined in China because the electricity was really affordable, and they have a lot of hydropower there, and they also burn a lot of coal. And so the Bitcoin is being mined there. And then China decided we don't want it anymore. So it's illegal to mine Bitcoin in China. And those guys play for keeps. You don't want to break the law in China. I think they put you in prison without any hesitation. So all the Bitcoin mining left China. No big deal. It was like, whatever. It'll go get mined. It'll be mined in Iceland. It'll go be mined in, wherever. But it will be mined. And it's been really interesting to see it kind of continue to evolve. But it's evolved with, think about where it started and where it's at today. Some person, which is still anonymous at this point, created it and created some code that established the blockchain. And he did that in 2008. And we are 16 years after he did that. And this thing's still going on. And it's kind of pretty amazing that he did that. And it's got a market cap of like 3.5 trillion, excuse me. Let me double check that. I think Bitcoin, what's the market cap on Bitcoin now? All right, Gemini. It's time to go to work, Gemini. 1.8 trillion. Incredible. And some dude who was really pissed in Northern California because the subprime market meltdown, and the government, the US government, bailed out all these big financial institutions. He created the Bitcoin, he created the blockchain, and there it is, $1.8 trillion. It's not run by any one person, it's not controlled by any one person. It is being simultaneously managed by thousands of computers around the world. You cannot control it. It's just this thing that's going to continue to evolve based on what humanity decides to do with it. Collectively, all the people that decide to buy Bitcoin or, do something with Bitcoin. So I think we went deep with Bitcoin, and I'm glad we had the conversation. Good to see you, Falls Grave. Michael Anthony. So I'm trying to understand women and girls wear it more. I don't get it. Right. So if you're going to invest in Bitcoin, I mean, if you go into the ETFs, I think you're good. Okay. So gold, women wear gold. Got it now. Sorry. So the best way to buy Bitcoin, there's nothing wrong with the ETFs. The ETFs are managing the Bitcoin, and there is a lot of risk, or there's some risk with Bitcoin, right? If you have a wallet and somebody gets a hold of your keys, they're going to take all your money, and then you're not going to be able to get your money back. So that's one of the bad aspects of having a fully digital, independent, store of value. So ETFs aren't bad, and I feel comfortable buying through my broker and having my Bitcoin in my brokerage account, because there are some safeguards there where my coins are not going to be transferred just nilly-dilly. They could if you had a wallet that is non-brokerage wallet. So get familiar with that. But if you're new to it and you want to play it safe, ETFs are pretty safe, not bad. And if your broker gives you access to Bitcoin and Ethereum, get familiar with it. I think that's a pretty safe road. It's a lot safer than it was, 5-10 years ago. I think you had to be super careful, and you should still be careful, right? We're all careful with our accounts and so forth. Yep. So got it. Okay, cool. Yeah. Sorry, I didn't get that. So, all right, cool. So we covered Bitcoin. That was a bonus. Good to talk about Bitcoin. And we talked about a good string of companies. Now, there was one story that I wanted to run down. I heard on the Discord that PayPal had some negative press. Let's see, 11 days ago. So I don't see any negative press. The story was that PayPal and I think Honey, there's some kind of negative story going around. So YouTuber accuses PayPal's Honey browser extension. So there's an accusation that if you're using the extension, it's ripping off customers. Okay. Okay. I never even knew there was an extension by the name of Honey. So hopefully they put a lid on that and they don't let it get out of hand. I'm a PayPal investor, and yeah, it seems like they made it out of the woods. They were kind of a really undesirable stock. They've been rallying this year, so it's good if they can get some of these this negative story. They put a lid on it. All right. Well, everybody, thanks for tuning in. Um, everybody have a very nice evening. It's Christmas Eve here in the States. It is 6 p.m. Pacific. I'm in California. I'm gonna shut things down and wish you guys a Merry Christmas, Happy Holidays. Thanks for tuning in. Thanks for all the support, guys. Really appreciate it. And especially paid members, really appreciate you. And please keep the comments coming. And everybody have a nice night.